Mm, check that. What's going on, everybody? Thanks, everybody, for tapping in tonight. We're going to be talking about business funding. This is going to be your business funding masterclass. And there's a couple of things we're going to be touching on this evening. We're going to be talking about business funding basics, what things you need to know, common reasons that business owners are denied. Definitely. Oh, my God, so twice. All right. Let me share again. Sorry about that technical difficulty. Along with talking about common reasons that business owners, new entrepreneurs, and startups are denied, we're also going to talk about some strategies that you can use to get funding, even if you have bad credit. Along with that, we're going to be looking into how to get your first $100,000 in funding. What I need everyone to know and understand by the end of this is that anyone can get funding with the right strategy and with a coach that can lead them to the finish line. Now, you may have been on several different master classes before. This may not be your first one, but here's the thing. A lot of you are searching for information, but a lot of people are looking for information, but they're not experiencing a transformation, right? And the reason is that these banks, they want to keep this information secret from you, and they want to keep you confused. They want to keep you in the dark. So throughout this masterclass, what I'm going to be doing is shedding light on some of these exact principles so that you're no longer left in the darkness. I'm going to be sharing some information that no one else is actually talking about, such as getting access to capital, even with bad credit, and some of the ways that you can go about doing that. I've walked dozens, even hundreds of people through these exact steps, and I got them funding, whether it's just $15,000 or even $100,000 in funding. And I'm constantly learning new ways to get people funding as well. I'm always in the lab, networking, learning new strategies, understanding the changing landscape amongst these banks. At the end of all of this, I want you guys to take action. And that's going to be a common thing because everyone can get funding. Now, who is this class for? Tonight, I'm going to be talking to my entrepreneurs. I'm also going to be talking to my investors, whether you're a real estate investor or you're an investor in other small businesses. I'm also going to be talking to my established business owners who want to scale up, along with my new entrepreneurs and my wannapreneurs. You've been browsing on the internet, you've been inspired to maybe start a side hustle, but you're not quite sure on where you're going to get the money to start. Yes, I'm going to talk to you as well, because this is information that you can leverage and utilize at any stage of your growth, your scale, and your business as a small business owner and as a new startup. Now, I'm going to be diving deep today. I'm going to be going into the vault. We're going to be talking about different reasons and pitfalls that you can avoid so that you're not denied when you go for funding. We're also going to be talking about what does the funding landscape look like right now. We're also going to be revealing some secrets that the banks don't actually want you to know. Because believe it or not, right now in today's climate, the banks are actually competing with alternative lenders who are killing the market right now because people are struggling. People have low credit scores. New business owners are struggling to get in new clientele. People aren't buying as much as they once were. And guess what? That's putting a strangle on the banking industry and the lending industry as a whole, right? Defaults are at an all-time high. Bankruptcies have risen over 10% in the past 2 years, just between since the pandemic, right? So with this changing landscape, lenders and the banks have to continue to figure out how can they stay in tune with today's market and stay in tune with the needs of their customers. And we're going to be diving deep into all of that today. Now, a little bit about me. My name is Jamal, your credit protector. Welcome to the channel. If you're watching this as a live stream, welcome to everybody that's tapping in. If you can hear me, those that are live with me in the chat, drop a 1 in the chat if you can hear me. Now, I was a government employee. I grew up in the DC area where most people are well-to-do. You either get a government job, you work for the Metro, right? You go to school, get an education, and you work. That was the path that I originally took. It wasn't until I was exposed to another world of entrepreneurship and that something tragic happened with my credit. They literally wiped out and vanished, that I was exposed to the other side of life, that it was possible to take control of this situation and that I can build something for myself, not just for myself, but something for my family, something that can create a legacy and something that I can pass along to other people. But the first step was that I had to figure this thing out. I had to sit and spend hours, months, figuring out the credit system, the lending system, and just how to get my credit back on track. To give you a little bit of more insight, I was actually marked as deceased for some apparent, for unknown reason. Actually, I was going to say it was an apparent reason, but it wasn't apparent. I have no idea to this day why I was marked deceased by these credit reporting agencies, TransUnion, Equifax, and Experian. To this day, I still don't know. But what I did know is that I had to fix it, and I had to figure out what the hell happened and how to keep it from ever happening again. And that's exactly what I did. I spent the next year learning exactly how these credit reporting agencies worked, how the lending process worked, and understanding the power of being able to borrow money to produce income. And I understood the power that having good personal credit can have even when it comes to getting access to business funding. Okay. Now, something I want to share with you really quickly is that even if you don't have an actual LLC, you can still get access to business funding. There's something called a sole proprietorship. So if you're a person, maybe if you're a barber, maybe if you are a hairstylist, or maybe you sell things online, maybe it's like a side gig or a hobby, something like that, and it's outside of your routine 9 to 5, guess what? You are now dipping into the world of entrepreneurship, and you are, in fact, operating as a sole proprietor. It's very possible to get funding for your business as a sole proprietor before you get an EIN, before you get an LLC. And I say that to remind everybody, everyone is fundable. So after figuring this out, I went out and I got myself $200,000 in funding. I went out and I developed and created my own LLC, my own website, and I went out and I got that access to funding. I even got access to funding for a company that was 2 days old. So if you're a startup, pay attention. It's possible. Now, here's a little bit. This is my channel for those that aren't familiar. It is the Credit Protector on YouTube. I have over 400 videos, and I'm now over 2,000 subscribers, 200,000 coming soon, but over 2,000 subscribers on my YouTube channel. All we talk about is credit, finance, and business credit, particularly how small business owners and new entrepreneurs can get access to credit and funding to scale up their businesses. Now, I want you guys to do me a favor. Please take notes. This may be your first masterclass of this kind. It may be your 100th masterclass of this kind. But I tell you, note takers are also action takers. It allows you to retain the information for twice as long and twice as effectively when you take notes. Imagine that you paid $5,000 for this class. And if you have questions, save them to the end, because those of you that are watching this live on my Zoom, you'll be able to ask questions at the end of this masterclass, okay? Those of you watching through the live YouTube stream, unfortunately, I won't be able to see your questions, but those that are watching this via the Zoom who tapped in through the direct link, you'll be able to ask questions at the end of the masterclass. Now, there's one more thing that I need to ask you guys, along with taking notes, along with being active and tuned in. I need you all to be committed to taking action. I'm committed to giving you all the information that you're going to need in order to go out and get your first $100,000 in business credit. I just need you to be committed to taking the action. Don't leave this information here or leave this class saying, oh, wow, that was really good information, and never do anything with it. You must take action. All right. So if you're committed to taking action, just drop the word committed in the chat. So I know that my action takers are here with me today. All right, we got a couple of action takers. I like that. I like that. Now, let's get in. Let's understand what this is. What is funding? Now, simply put, funding is simply the process of getting money for your business. There's a lot of ways to go about funding. You can borrow money from a friend. You can borrow money from a family member. You can do a fundraising event. You can go on a GoFundMe. You can do something like a Kickstarter program, which is another way of raising funds. And you can borrow money from the bank. Tonight, we're going to be talking about getting access to capital from the bank, which is by far the fastest, the safest, and the easiest way to get access to over 6 figures in funding. Now, some of the things that funding can be used for. It can be used for business growth. You can use it as working capital. You can use it to purchase new equipment. Maybe you need to hire new employees. Or you're using it for marketing and advertising so that you can get in front of more people so more people can know about your stuff. Alex Hormozi once said is that it's simply the act of when more people know about your stuff, the more they can buy from you. The more people that know about your stuff, the better. Now, this is something that I also want you all to think about as we go through this. As you think about the funding that becomes available, think about, what do you want to use this funding for? What will it manifest for you? Bob Proctor once said, thoughts become things. If you see it in your mind, you can hold it in your hand. So I want you to do is not just about getting access to the capital, access to the money. What will that money bring you? Is it going to bring you financial freedom? Is it going to bring you stability in your business? Is it going to bring you growth in your business? Keep that at the forefront of your mind, because we are going to double back and I'm going to ask you this same question later on tonight. Now, really quick, for those that's watching, I just want to get a sense of where we are. Everyone that's tapped in right now, On a scale of 1 to 10, how many of you feel confident that you'll be getting funding in the next 30 to 60 days? Just the way you are right now, you're fresh, you're in the room, whether you're an established business owner, whether you're new to business, or whether you're still thinking of an idea. How confident are you that you'll be able to get access to funding in the next 30 to 60 days? On a scale of 1 to 10. 1 is like, you're like, man, I'm not equipped. I'm not ready at all. I have no idea what I'm doing. And my credit is like in the toilet. To 10, it's like, man, I've been doing this for a while. I just don't have the time to do it. And I'm looking for somebody that can just take this burden off my hand because I don't have the time. I got the credit, I got the business, I got the cash flow, I got everything, right? Let me know. Drop it in the chat from a scale of 1 to 10, just so I can get an idea. See, okay, all right. I see a lot of 4s, okay. I see a 5, okay, Karen. On average, 5 to 6 is typically the range most people say. I haven't seen many people give like a 2. I've never seen anybody say 10. So 5 to 6 is spot on. Now, here's some traditional funding. We hear these terms all the time, but we may not be too familiar with exactly what they are, how they work. So some traditional ways of getting funding are business lines of credit. Business lines of credit, you typically will need a little bit more age on your business, typically 2 years. They're not always startup friendly because of that age, right? So it's a little bit more restrictive. You have zero interest financing. Zero interest financing is typically more open and it leans more towards startups and sole proprietors. Okay. So even if you have a brand new business, you can still qualify for zero interest financing. For my sole proprietors, this is exactly where you want to start looking at. For my startups, exactly where you want to start looking at. Real estate, that's mortgages, that's a HELOC, that's refinancing an investment property. Age of your company doesn't necessarily matter as much because you have the real estate backing the deal. So as long as you have some real estate, you're in position to get access to capital. Now, here's the thing with some of these real estate loans, some of them, depending on whether you're doing a hard money lender or you're going for traditional funding, they require a minimum credit score, I would say, of even a 660. Now, depending on the type of funding you're looking for, it can go lower, meaning that if you're in the 500s, there's still some opportunity there. SBA funding, that is a bank loan. Typically, you're going to go through your bank who's SBA approved or SBA preferred lending partner, and they're going to want to see your financials, both on the personal side and on the business side. And typically, they want to see about a 660, maybe a 680, depending on your lender. And then lastly is auto loans. You can get auto loans solely in your business name. You've seen it online. I know you have. The 6,000 pound rule, the auto loan tax write-off play. You've seen these things. These things are real. You can absolutely get a car or a truck or crane or construction equipment solely in your business name. But here's the thing. How do you qualify for all these different types of funding? We saw all these different variables, all these different opportunities. But what's really the way to get them? How can you qualify for them? The gurus and the banks won't tell you the exact requirements. Why is that? I'm not a guru. I am a coach. My goal is to help you get to the finish line. My goal is to demystify all of the confusion, all of the information you may see online. Because here's the thing. I can tell you all day, every day, hey, American Express is great for startups if you have a 700 plus. Chase is great for startups if you have a 700 plus. Even Wells Fargo. I'm not a fan of Wells Fargo, but Wells Fargo is great for startup funding if you have a 700 plus. But what are the exact requirements for each and every product that they have? Do you need a relationship with them? Have you already tried applying for it, but you already got denied? These are things that happen even with you studying all the information that's online because it's not specific to your exact situation. Just like our DNA, your business is custom to you. So your funding journey is going to be specific to you. You may not need zero interest financing. You may need it. You may only want to deal with installment loans. You may only deal with business lines of credit. You can go from masterclass to masterclass to masterclass and gather as much information as you can, put it in a notebook, put it in a Google Drive, right? Type it up in Chat GPT, have GPT create a whole ebook for you. But is it going to be customized to your exact situation? That's what you really need to ask yourself. Is it going to be customized to you and what you're doing? Now, here's the thing. By not telling you the exact requirements of these banks, the gurus and the banks are taking advantage of you because they leave you in the dark, right? You go out, you say, oh, snap, I saw Truist does multiple entity funding. Oh, I saw Truist gives out $25,000 in a business line of credit. Oh, that's amazing. Oh, they have personal cards. Oh, they have business cards. Wonderful. You go out, you apply for Truist, and you get a $2,000 credit card as opposed to the $25,000 business line of credit because you saw 25,000 business line of credit, but you applied for the wrong product. That goes into being left in the dark. When you're left in the dark, you're blinded and you end up just applying blindly for any and everything with no real rhyme or reason, and it messes up your entire funding sequence. After going through that, you end up getting denials. You end up with a bunch of hard inquiries that you can't remove because now these hard inquiries are tied to low limit credit products. If you close the credit product, it's going to reduce your available credit. Now you're stuck or you feel stuck. And these new denials that you're getting because you didn't have an exact game plan for your exact situation is leaving you demotivated. You don't want to apply blindly. You want to know what's required so that you can make sure you meet the requirements and so that you can put together a clear-cut strategy to executing and getting the absolute most money available to you. Now, here's some things, right? When we're talking about fundability from a bank, let me know in the chat, have you seen this before? The 3 C's of lending. These are the only 3 things that they're looking at, okay? Now, there's more complexity to this, but to keep it simple, these are the 3 things. They're looking at your credit. That's your personal credit and your business credit. The next they're looking at is cash flow. When you fill out these applications, they're going to ask you things like, okay, well, what's your personal income? Okay, what's your business revenue annually? Last thing they're going to be looking at, and this is for my more established business owners who may need larger lines of approvals, 6 figures, 7 figures, they're going to be looking at collateral. Collateral can come in many different ways. So for instance, collateral can be if you have a vehicle in your business name. Collateral could be if you have real estate in your business name. Collateral in some instances can be your accounts receivable in your business name. Almost literally anything of value under your business could be seen as collateral. And we have access to lenders that look at those different types of collateral. This is key because this is one way, y'all listen up. This is one way that you can get access to capital even with bad credit. The great thing about having the 3 C's is that if one is weak, you have two others that you can lean in on. So let's say you have a 600 credit score. Okay. But if you have good cash flow and you have collateral, those 2 C's can overcome the credit. Let's say you have weak cash flow. Let's say you're a startup. You don't even know what I'm talking about right now, but you have a 750 credit score. Because you have a 750 credit score, you're still able to go out and get funding as a startup solely because you have good credit. This is why understanding the power of your credit is so important. And this is why good personal credit is one of the foundational points of getting access to business funding. And yes, no matter what the gurus may tell you, no PG is funding is cool, but it's not going to give you as much money as quickly as having a solid personal credit score. Right now, in this exact lending environment, the big banks are staring heavily at personal credit. So let's dive into this personal credit phenomenon. This is the FICO score. Now, your FICO score, here's the chart. If you've never seen it before, the most important thing you can do is make your payments on time. That's 35% of the score is solely making your payments on time. Next most important thing are amounts owed and your credit card utilization. With your credit card utilization, you want to keep it low. I'm going to give you guys the exact blueprint on exactly how your personal credit needs to look to maximize your funding. Now, if this is making sense, drop a 1 in the chat for me. If you're keeping up with me, I want to make sure I'm not moving too fast. Drop a 1 in the chat that this is making sense. So some things that you can do to improve your credit score is you want to make all of your payments on time. They're also going to be looking at how much of your credit is being used at any given time. That's your credit card usage. You want to keep that below 30%. The other thing is how long have you had your accounts? We call that your account history. We call that your account age. The next is overall, how much do you owe? This is called your debt to income ratio. Now, if you're a homeowner, you probably heard of the DTI already, or if you're a business owner who's gone for various kinds of loans, you probably heard of the DTI. And on the business side, they call that your debt service ratio, your DSR. So those two terms may already be familiar to you. Now, I'm going to give you guys, this is where you want to take out a screenshot. Karen, this is the perfect opportunity. Go ahead, take a screenshot of this. I'm demystifying everything for you right now. Your bank funding qualifications. This is what you need. You need no late payments in the last 3 years. And along with this, this is for maximum funding, okay? There's a lot of ways to get funding. This is if you want the maximum funding, the maximum approvals when you go to a lender. They don't want to see any late payments in the past 3 years. You want to have at least 2 trade lines over $5,000. Your credit card utilization, you want to keep that between 1 to 9%. 7% has been a sweet spot for some people. You want to have at least 5 years of age on your credit report and no more than 2 hard inquiries within the last month. So now you guys know, we just demystified the whole lending experience. These are the qualifications that you need to get the absolute maximum funding from a bank. Now, here's the thing. Don't get disheartened by this. Don't look at this and say, oh man, I don't qualify. I don't have any of these data points. Like I'm dead in the water. You're not. you're not dead in the water, because remember, this is just based on your personal credit score. We still have collateral that's important. We still have cash flow that's important. Okay. Even the age of your business can play a factor, and the relationship you have with the bank. So don't think just because you don't meet these criteria that you simply are just dead in the water and you won't be able to get funding. It's not true. I'm going to show you why a little later. Now, some ways that you can improve your credit score. Of course, pay down your current debts. When we're talking about paying down your current debts, I'm talking about your open, active accounts. Okay, if you still have an open active account, you definitely want to make sure that you're making all of those payments on time and add on some additional payments to get that debt down even faster. You want to add positive accounts for my folks that may be coming out of a bankruptcy, or if you're new to credit, if you're young and you're in e-com, or you're looking to scale up a SMMA and you need some accounts because you just turned 18, you want to add positive accounts to your credit, okay? 5 to 10 positive accounts at minimum. You want to dispute those negative items. And in some instances, especially if you have a pretty small profile or a thin profile, you want to add trade lines or authorized users to get you to that 5 to 10 range. Sorry, this just popped on. So this is Joelle. Now, she's one of our clients who had a low credit score, right? And we had to go through some restructuring with her, right? She wasn't ready right out the gate with those data points that I previously showed you, but that's okay. We know that everything is a journey. You may not be there right now, but we can help you get there. So throughout her journey, we put together a program that helped her, of course, improve her credit, also help her pay off all of her debt, and we got her access to over $200,000 in zero interest funding. Right. So this is what happens when you work with a coach. We put together the plan. She wasn't left blinded. She wasn't in the dark. We were able to say, okay, these are the exact things we need to focus on so you can go get funding. Not only did we help her structure her credit profile, put her business together, but we also laid out the blueprint on what to apply for and when to apply for it, so that it eliminated unnecessary hard inquiries and it eliminated any unnecessary denials. Real quick check-in. Let me ask you, how has your search for funding been going? And you can let me know. Have you just started? Have you gotten some funding and now you're kind of in a place where you're not really sure where to go next? Have you gotten funding before, but now you're getting denials? Do you have good credit and you just need somebody to put a strategy together for you? Let me know, how has your search for funding been going? Where are you in your journey? Let me know. I'm very interested. Mm-hmm. Mm-hmm. Okay. Okay. I see. All right. So here's some hard truths. 82% of businesses will experience a cash flow issue. Okay, Karen, you just started looking. Okay. Okay. The idea, Karen, at the end of this, I'm going to be pointing you in the right direction. 82% of businesses experience cash flow issues. And this is for my folks, even with good credit. Even with good credit. I've heard this all the time. And you may be one of the people watching this and you're like, yeah, that's me. Maybe you're in a great position right now. Your credit score is over 700, maybe even 800. Your business is cash flowing. You also may be a W-2 employee with a business on the side, and you're making really good income. And you're thinking to yourself, well, I don't really need any funding. I mean, everything's straight right now. Everything's good. Why would I need funding? It's not about where you are now. It's about preparing for where you want to go. And I'm talking to my folks, whether you already have great credit, great cash flow, you already have $40,000 in the bank, or you're a startup and you're down to your last couple of dollars. Every business experiences some kind of cash flow issue. Every entrepreneur will experience some kind of cash flow issue. Whether your money is tied up into multiple deals and a new deal coming to the pipeline, and you're like, damn, I just need 25,000, but I already have 60,000 tied up in 2 other projects. Damn, I just need this 25,000. I'll be able to get into this new one. Or maybe you need to hire more people, right? Your business is booming, the store is growing, and you can't keep up. You're losing customers because you don't have enough people to service those customers. Or maybe you don't have enough inventory to meet the demand. And because you're only operating off of cash flow, you can't get enough cash flow in fast enough to buy the inventory to meet the demand. This is common for all established businesses, brick and mortar businesses. If you're an online business, maybe you need more technology. Maybe you need somebody to help you put together your website and your AI to build out those automations for you, right? I'm working with someone right now. It's like $5,000 to build out an automation sequence just to help me with my client journey. You need funding for those type of things, and not having access to funding when you need it, that's when disaster strikes. And here's the secret. The banks, they're not going to be there when you need the money. So you need to get access to it when you don't need it. So if you think you're in a great position now, be in a better position tomorrow. Have a coach to help you navigate this world of funding and make the smart decision. Because regardless, 82% of businesses experience cash flow issues. 95% of businesses disappear within the first 5 years. And that's not me saying it. That's a statistic from the Small Business Administration. They're the ones that keep track of the data. 95% of businesses fail within the first 5 years due to cash flow, lack of market. They just outright run out of money. And of course, mismanagement teams. Having access to capital helps with all of those problems. Now, is this you? You've gotten some applications rejected, or you're getting approvals, but now you have a bunch of high interest rates that are just crushing your bottom line. You have low limits. You're only getting approved for maybe $5,000, $2,000, $6,000, $7,000 here and there. Or like Karen, you're just getting started and you're just not really sure what to do, where to go, how to start. What should you do? Have an LLC, be a sole prop, be an S corp, go for real estate, go for a line of credit, go for a loan. Which one works best for you and your company and your goals? Here's some reasons that most people get denied. One. Actually, I'm going to switch up the order for these. Really, the biggest reason that a lot of people get denied is that they apply for the wrong product at the wrong time. For instance, you decide as a brand new startup, you want to go for a line of credit from Bank of America. Bank of America line of credit is a great product, but it's not startup friendly. You need to be in business for 2 years before you qualify for a Bank of America line of credit. But you didn't know that. So you went out, you set up your business, you went to the banking manager, the guy right at the front who's probably just started there last week. He doesn't know any better. And he's like, yeah, sure, we can get you a line of credit. And then he sends it to underwriting and it's denied. And the worst part about it on the business side, they don't even tell you why you were denied. They don't. They don't even have to tell you why you were denied. On the personal side, under the Fair Credit Reporting Act, yes, they do have to tell you why you were denied. But on the business side, they don't. They could just tell you no, have a great day, try again in 30 days. And you're left again in the dark trying to figure out what the hell to do so that you can get access to the capital that your business needs. Or maybe you went for an SBA loan and you didn't realize that the SBA loan, they want a business plan. They want an operating agreement. They want to see your tax returns and your business tax returns. And as a startup, you only been in business for 9 months. You don't have any of that to show them. So then you get denied for the SBA loan because you don't have all the docs, because you didn't know that you needed all those docs and no one told you you needed all those docs. Applying for the wrong product at the wrong time is by far the number one reason small business owners and those new to the funding world get denied. Next is having the incorrect business structure for what you're trying to apply for. Some businesses are startup friendly. A lot of the big banks and regional banks are startup friendly, meaning that you can make a business today and you can go to Chase, Wells Fargo, Bank of America, US Bank, and get some form of funding from them as a brand new company. Whereas there are other companies, other banks like Citizens Bank, you have to be in business for at least 6 months before they even consider your application. If you're not 6 months old, you're automatically getting denied. But you have to know that before you apply. That's one of the reasons why you want to work with someone who can put together a funding strategy for you so that you can avoid that. You don't have to just blindly apply for anything, hoping and praying, and then just getting the denial because you didn't know what the bank required for the structure of your business. Another reason people get denied, and this is super common, this can even happen on the personal side. You don't have a professional business address or even an email, but more so the physical address of your business. Banks will deny you if you use a personal address because they see it as small, they see it as unstable. Every time you go to the bank, you want to come off as a big business. You want to come off as a 6-figure producing entity. The way you can do that is by at very least having a professional business address that's separate from your personal address. Another reason you want to do this is for your privacy and your security. When someone Googles your business, because you will want to list yourself on Google, you will want to list yourself on 411, you don't want people to be able to pull up your house when they type in the name of your company. People are crazy, okay? People are crazy, and you want to keep your business and your private life separate. In order to do that, get yourself a business address. If you're wondering, where can you go to get a business address? There are a lot of places. You can go to Regis. You can go to Opus, virtual offices. You can go to Da Vinci, virtual offices. You can even just hop on to Google and type in virtual offices near me or office spaces near me, and a plethora of options will pop up. Take your pick. Make sure it doesn't come up as a mail receiving agency with the United States Postal Service, and you'll be good to go. The next reason, and another common reason most of us get denied, is just we have a weak credit score. This also can tie into applying for the wrong product at the wrong time. If you have a weak credit score, then you want to know what products, what banks, what lenders cater to people with weaker or less than perfect credit. Okay, you don't want to go for a product that requires a 720 if you got a 650. We want to go for the people that are going to approve us at a 650 because that's what we got. We got a 650. Who's going to help me get access to the capital while I have a 650? You want to work with someone who can guide you in that direction and help you make that connection, so you're not constantly getting denied because you're applying for the wrong thing at the wrong time. Again, everyone can get funding as long as you have the right funding strategy. I need everyone to understand that everyone can get funding as long as you have the right funding strategy and you have somebody that can let you know what your funding strategy should be. Here's something that's important. We know that the banks need you as much as they're always denying us lending. Here's the thing. A bank is going to go out of business if no one deposits any money into it because they operate off of fractional banking. For every dollar that we put into a bank, that bank is able to lend out $10. That's just how it works. I say that because we want to make sure that we build relationships with the banks that we're going to get the money from and become a partner with that bank. Part of that is building a relationship, because as we deposit more money into the bank, they're going to see you and your business as more of an asset to them, because the more money you put into them, the more money they can loan out. And guess what? For every dollar you put in, that means there's $10 they can loan back to you. Now, I don't know about you, but I give $1 to get 10 every day of the week. You don't even got to convince me. Oh, I'm going to give you $1. You're going to give me $10? Well, how many dollars can I give you so you give me 10x? Because I want the 10x. Okay. I'm always down for 10xing. Okay. No Grant Cardone, but I'm always down for 10x. Hold on. So this is Philip. Philip also had a very large amount of debt that we had to help him restructure and actually pay off so that we can help him get funding. Now, as we watch this video, you're going to see that he got a substantial amount of funding. A lot of my clients ask, how much funding can I get? I always answer, well, how much funding do you want? He paid off $85,000 in debt. From there, we were able to get him $431,000 in funding. I think that was a good trade-off. What do y'all let me know? Was that a good trade-off? You pay off $85,000 in personal debt and you got access to $431,000 in business funding to launch a software, to launch two businesses, not just one, two businesses. That's a good trade-off. And these are the type of things that may be Necessary. You may not be able to be in position to get funding right away. You may need to pay off some debt. You may need to rebuild your credit. You may need to start an LLC. You may need to beef up your business credit before we can get you the funding that you're looking for. There's nothing wrong with that. Everything doesn't have to be right here, right now. Let's think about the long term, because I'm assuming that if you're starting a business, you want that business to be around for the long term. You're not looking to start a business today and then close the business down in 30 days. I don't think so. I'm assuming that you at least want to keep the business for at least another 5 years. So why not put yourself in position so that you can keep getting funding for the next 5 years? Does that make sense? If that makes sense, drop a fire in the chat for me. You want to think long term. There's nothing wrong with starting now and being in position for your future self. Do your future self a favor. Start now, get in position. If that makes sense, drop a fire in the chat for everyone that's watching. And I got a question for you. So what would you do with $50,000 to $100,000 in business funding? Like, seriously, we went through all this, right? So far, I showed you the exact criteria that the banks are looking at on your personal profile. I showed you a couple of individuals who had some success, even with starting off in bad credit. What would you do with 50 to 100,000? Okay. Okay. New equipment. I like that. Marketing. Absolutely. A lot of my money is going to be going into marketing and automations. Excuse me. Hiring somebody. Nice. I like that. I like that. Shit, I need to hire somebody too. Now, let's say you're not quite in position just yet. Let's say you have less than perfect credit. You have some blemishes on your credit. It's facts, right? Marketing and equipment. I love that, Karen. Let's say you're not quite in position, and that's fine. We have creative solutions. One is your retirement account. Most people don't know this, but you can borrow against your retirement account for real estate, education, and to start a business without penalty. All right. So this is if you have a 401k. If you are a teacher and you have a 403b. If you're government or military, you have a TSP. If you have a Roth 401k, if you have a Roth IRA, if you have a traditional IRA, you can borrow against these different retirement products in order to fund your business. The great thing about these type of loans is that they don't require a credit check. So remember, earlier I told you I'm going to show you some ways that you can get money in lending even with bad credit. This is one of those ways. This is just the first way. Your retirement account. And if you have multiple retirement accounts, like me, I worked in the government and I was also a civilian employee. I had both. I had a 401. I personally have a Roth IRA, a 401k, and a TSP. I have all three of them. And yes, I'm able to borrow from all three of them as necessary. Another way is stocks and bonds. If you have a brokerage account, you can borrow against your portfolio in the form of a margin loan, right? Check with your financial advisor, but you can borrow against that. That can act as capital to fund your business. And guess what? There's no credit check for that. So it doesn't matter if you have a 300 credit score, you can still get capital as long as you have a brokerage account. Next up, we're looking at cash flow lending. With cash flow lending, you have typically, this is through your payment processor. You've been with them for about 6 months. They're looking at and tracking how much cash flow and how many deposits you're getting through that merchant account. Okay. And from that, after about 6 months, they'll make you an offer. The great thing about that is, again, no personal credit check. It's solely based off the strength of the business. Now, of course, couple of things. Of course, you need to be your LLC. You need that. You need to be set up with a payment processor. Payment processor, Jamal, what is that? That's PayPal, that's Stripe, that's Square at very least. Authorized.net even. Okay. These type of companies monitor the credit card transactions that they're seeing going through that account and being deposited into a business bank account. That's the third thing you're going to need, a business bank account. We can't talk about getting access to capital for your business if you don't have a business bank account. We're talking about doing real business with real people, with real customers, right? Because again, long term. So cash flow lending. Another thing we're looking at is cash advance, a merchant cash advance. Some people don't like these. They have their place. Each and every one of these things that I mentioned has their place in your journey. If you are a high cash flowing business, you're established business, merchant cash advance may be something you can look into. Typically, you only need to be a year in business and show 3 months of bank statements to qualify for merchant cash advance. A lot of merchant cash advances can go from 50,000 all the way up to 6 figures. All right. So if you're in position, you're a 1-year-old business and you're watching this and you're like, damn, I need quick cash. Another great thing about merchant cash advances is that you can get the funds released to you, deposited straight into your bank account as soon as 24 hours. All right. This also does not require a hard pull on your credit. They'll do a soft pull. But even if you have bad credit, merchant cash advances will still lend you money. Okay. I'm talking 50,000, 20,000, $30,000 because it's based on the strength of your business. That's why they want to look at those business bank account statements. Right? So we went through 4 ways of you getting access to capital without ever touching your personal credit. I said, these are secrets that the banks don't want you to know. The banks aren't going to tell you that you can do this and it has absolutely no impact on your personal credit. I've spoken to owners and they like, oh, wow, I didn't even know I could borrow against any of my retirement accounts and turn that into a loan for my business. Yes, you can. Now, some other creative solutions include equipment financing. That means taking out a loan to buy equipment, or if you have equipment, right? Let's say you're a construction company, you have cranes, you have dump trucks, maybe you're in trucking, you have a trailer, okay? If you have a restaurant, you have those deep fryers, the kitchen equipment, you can take a loan out against that equipment and use the equipment as, going back to one of the 3 C's that we spoke about, collateral, and getting access to capital like that. Last but not least, we got credit stacking. You probably heard of credit stacking. I'm going to break that down in a little bit. Here we go. So credit stacking is a very creative solution. Now, this will require credit check, but here we go. We're going to break it down. For instance, you went to Bank of America. You got $5,000 from Bank of America. That's not a lot of money for business purposes. But okay, we got that. All right, what's next? Okay, you get $10,000 from Apple. Cool. Now you're at 15,000. That's looking nice. We're looking good now. Then you went to one of your local credit unions. There are a lot of them. That's why I didn't pinpoint one. And you went to your local credit union, you got $15,000. Now, what started off as just a $5,000 approval has blossomed into a $30,000 approval, preferably $30,000 at no interest. That's exactly how credit stacking works. You're going to get loan options from different places because the more lenders that you reach out to, the more lenders you build partnerships with, the more opportunities you have. The other thing is that it spreads out your risk because you never want to have all your eggs in one basket. Myself, I have about 10 different bank accounts. I don't rely on any one bank to be my end all be all. You got to spread the love. The more banks you're with, the more opportunities you have. It's just the safest thing for you to do. So I will leave you with this. At very least, make sure you have multiple banks. Have about three of them. Have about three banks that you do business with. Now, getting approved, we went over a lot, and it's a lot easier than what you think, right? It's as simple as optimizing your credit profile. That means if you have a low credit score, if you have derogatories in your credit, get the derogatories off. Fix your credit. That's it. Fix your credit. While you're fixing your credit, build your relationship with the bank. Let them see those deposits going in. Let them see that your daily available balance is increasing on a month-to-month basis. Continue to make those on-time payments as you work with the company that's going to improve your credit. There are credit restoration companies out there. They work, they're real. I have a background in it. I used to do it for my clients, but now I partner with an affiliate that does it for me. And while the affiliate works on my client's credit, I help them get into position for funding. So I help them build those relationships. I tell them how to build the relationships. And I partner and introduce them to lenders that will still lend to them even while their credit is still in the restoration process. And all of that is part of a strategy. You have to build out a strategy. A lot of us, and I understand, I was there before too. A lot of us are afraid to take the first step because we don't know where to start. A lot of us are afraid to even do the proper research because we still don't know where to start. And then there's so much information out there that you just become overwhelmed and you kind of just fizzle out and you're just like, forget it. It's too much information. I'm not even going to worry about it. I'm having a whole mental meltdown just trying to figure this shit out. And it's too much for me. I don't want to think about it. And here's the thing. You have to work with someone that can get you in position. If you're not, after that mental breakdown, that meltdown, you're like, man, this is too much for me. Maybe I should speak with somebody. Maybe I should at least have a conversation so that they can give me the clarity that I'm looking for. Like, I'm with this bank, I'm with this bank, I'm with this bank. What bank should I be focused on, based on my goals? I have no idea. I need to sit down with someone who can listen to my current situation, my objectives, my business strategy, and help me put together a funding strategy based on my goals. Because you have to be in position. If you're not in position now, at least learn how to get into position. Now, this is another one of my clients. Her name is Veda, right? She is a real estate investor. And in her particular instance, she was operating out of abundance, right? She was one of my clients who everything was good. She had a 775 credit score. She had a retirement check coming in, and she was still a W-2 employee. So she technically had two incomes between having a pension and an active income as a W-2 employee. So she made over $200,000. She had retirement accounts, right? She was using her borrowing against her retirement accounts to invest into real estate. Remember, we spoke about this. You can use your investment, you can use your retirement accounts as a way to fund your investments. That's exactly what she was doing. She's been investing like this since 08. And she's on her, at that time, she was on her like fourth or fifth flip. She buys, rehabs, and then sells, right? So she fixed and flips. And she got tired of having all her money tied up because she's like, you know what, Jamal, the deals are coming in faster than the money. I'm getting in more deals than I have money to keep up with. And I'm tired of tying up all my money into these different projects because it's taking anywhere from 2 to 6 months to complete the process. And more deals are coming in. I'm missing out. Not only am I missing out, I'm just tired of using my own money. I don't want to use my own money no more. I want to use the bank's money. So we put together a process, right? And I got her access to $50,000 in zero interest funding. Since she was already in position, she had the good credit, she had the cash flow. It was easy to get her $50,000. And here's the thing. I got her $50,000 as a sole prop, meaning she did not have an LLC at the time we went for funding. So this is what we did. I got her funded as a sole prop, and I created her an LLC. So now when she's ready, she'll be able to double back to the same exact banks that she already got funding from as a sole prop, double back to them as an LLC, and get another $50,000 for the LLC. That's $100,000 that we're going to get for her, even though she only asked for 50. Y'all let me know if that makes sense. Drop a fire in the chat if that made sense. Now, I got a question for all my DIY people, for all my, I'm going to research, I can do this myself. I know my guys, I'm the same way. When I learned about credit, I fixed it myself. It wasn't until the higher, more advanced levels, like the information I'm sharing with you all, that I needed someone to sit down with me and explain this stuff. It wasn't until I got to this level that I needed additional tutelage. So I got to ask, how much funding do you think you missed out on by just doing it alone? Anybody went for funding and they only got $10,000, but in reality, you probably could have got 25,000. Maybe you got 25,000, but you could have got 35,000. Maybe you only got 500 and you could have got 5,000, right? How much money, how much funding have you missed by thinking that you can do everything yourself? Listen, Amazon, Tesla has a team of people that watches the money and helps them go get money every day. They have a team of people that help them get money every single day. That's what the finance department is. That's what the budgeting department is. That's the job of the CFO. If Amazon and Tesla has a whole team of people to help them get money, why don't you? It just makes sense, right? Most of us want financial freedom. Most of us want to build a long-term, sustainable, profitable business. So why wouldn't we have somebody to help us get money? Like, why? Why wouldn't I do that? If Tesla is doing it, if Amazon is doing it, why would it be a bad idea for me? Why would it be a bad idea for you to work with somebody that can help you get more money? Now, with that being said, I am offering the opportunity to work with you directly and build out a funding strategy session. This is my breakthrough funding acceleration session. We're going to go through your personal credit, see what things may not be in alignment and what you need to do to get those things in alignment, a strategy that is specific to you. We're also going to take a look at your business. Are you currently operating as a sole prop? Are you currently operating as an LLC? Does your LLC need some tweaks to it? Is some stuff out of whack? Do we need to make some changes to your LLC in order to get you to a bigger bag and a bigger approval? Who do you bank with? And are you banking with them efficiently? Because it's one thing just to deposit some money, but are you depositing it on a routine basis, on a regular basis? What amount are you depositing? Right? Are you making and building a connection with the staff at your local branch so that they can fight for you when it's time for you to apply for a product? And making sure that you're applying for the right product at the right time so you're not denied. If you're a 1-year-old business, you don't want to apply for a product that's only available to 2-year-old businesses. You want to avoid that. If you're looking at a business line of credit or loan or zero interest financing, right? In an hour-long consultation, in this hour-long strategy session, it's a recorded Zoom call, and we'll actually go through all of those details. It's a very detailed phone call. It's so detailed, in fact, that before we get on the call, I have you complete a questionnaire so that I can understand more about you, your business, and your goals. So that when we hop on this hour-long recorded Zoom, it's straight action, straight information, right? We're getting straight into it so that you understand what it is that you need to do and potentially how we can continue to work together in the future. Now, this is another one of my clients. His name is X, and he actually owns a car dealership along with a lot of other things. He's a tall gentleman in the back with a very festive jacket. It's very festive. He wanted to separate his personal business from his, he wanted to separate his personal credit from his business credit. Things happened in his business that affected the personal credit side, and he never wanted that to happen again. So he came to me, and we actually, over the course of 2 years, we mapped out a plan and built out a strategy so he could separate his business credit from his personal credit. Not only that, we mapped out a strategy that helped him reach higher credit limits and a higher personal credit score. So this is his very long, well-written, elaborate testimonial. Okay. So a couple of highlights. When we started, he was 680 and 700. Again, he did not have bad credit when we started off. 680 to 700 is actually considered good credit or prime credit. But him being a person who was about his business, about his cash flow, he was used to having a 750 plus. So he was devastated by this, right? So things happened where he needed to separate his personal from his business, right? So we went through a plan to consolidate, okay? We went through all of his credit reports, and I got him up from 680 to the mid 700s. Not only that, I got him 2 business lines of credit and a Southwest credit card for $20,000. I text him, we do routine follow-ups, routine meetings, right? And his score is still going up to this day. Right? He's still a client. I still work with him, and now he's at about a 798. And this can only happen with an expert. Now, without an expert, for my do-it-myself people, do-it-yourself individuals, I feel you. Funding is confusing. Credit is even more confusing. And both of these things are confusing because every time you listen to somebody on the internet, everyone is saying something different. Can you get it with bad credit? Can you get it with good credit? Do you need to be a startup? Do you need 2 years? The answer is yes. I know it's crazy, but the answer is yes to all of that. And it depends on what you're applying for and when you're applying for it. And you don't want to go through the process of sending out all these approvals and you don't even get $10,000. as a business, there's not much you can do with less than $10,000. Okay. I'm just gonna, bootstrapping is cool. It's cool to bootstrap. If you need to do it, do it. But along with that, find ways to get access to capital. And if you don't know how to get access to capital while you bootstrapping, yes, I want to say it. Pay someone who can help you learn how to get access to that capital. I will pay somebody. I have paid. I have paid $2,500. I have paid $5,000 for mentorships to learn how to get access to $200,000 in funding. And that's not just one time. How to get access to $200,000 in funding over and over and over again for multiple businesses at multiple times throughout the years. And not only that, help other people get access to that funding. Because it's not just about me. It's about helping other entrepreneurs, other small business owners see that this thing is possible, that you don't have to keep looking at your P&L just to make sure that you can survive for the next 30 days, that you can use that P&L as leverage and get access to $50,000, $40,000, so that you can invest in your company, invest in your team, invest in your softwares, and continue to grow. And as a business owner, this is a lot, okay? You want to focus on what you're good at. You want to focus on what you are good at, what only you can do, and outsource the rest. Pay somebody else to do it, right? This way, you're less stressed about securing capital because now you have a clear, defined path on how to get the capital. There's no more guesswork. You already know. You already know, and you already have someone, in your corner going after that capital for you. This allows you to focus on the important things, which is getting more clients, getting in front of more people, and getting more deals. If you're an investor, getting more deals into the pipeline. And as these things continue to grow, you're going to need more access to capital in order to maximize each category for your business. Now, I asked this earlier today, and I think, Karen, you told me a 5. Now, we went through a lot today. We spoke about what the banks want to see when you apply, the big bank qualifications and fundability. We went through how to get access to capital even without good credit. We looked at retirement accounts. We looked at revenue financing. We look at cash advances. I showed you all clients who we helped put together different funding strategies for. We helped them through their personal credit. And I showed you how, with the plan, you can go from having bad credit to having great credit and getting access to funding. Now, I'm going to ask you all again, on a scale of 1 to 10, with this new information that I shared, on a scale of 1 to 10, how many of you feel confident that you'll be able to get access to funding in the next 30 to 60 days? 1, feeling like you're not that confident. 10, you're super confident. You absolutely know that you are the man, you are the woman who's going to be able to get this funding on a scale of 1 to 10. Now, during this time, most people put at least one number higher because I get it. We went through a lot of information. So if you were a 5 earlier and now you're a 6, I would consider that a win for you. If you're a 6 and you're a 7, you should definitely be proud of yourself because you're one step closer to getting funded and you're one step closer to understanding all of this, right? And you're one step closer to making a decision that will allow you to get access to the capital that you need to scale up your business or to launch it. Okay. 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 I see some improvement. I like that. I like that. Very good. Very good. That means I'm doing my job. I feel good about that. So what are your next steps? You joined me for the past hour and a half. We went through a lot of different things, dropped a lot of information. And I don't want to overwhelm you, right? There's only so much the human brain can take at one time. Your next step is to schedule a call with me. I'm going to drop the link in the chat so that you all can take advantage and schedule a call with me so that we can get you the funding that you're looking for. Let me drop that right now. Give me one moment. Boom. Okay. Drop this in the chat. Get this done. So I want to make sure no one is left out. I want to make sure everyone has the opportunity to move forward if they choose to. Because that's all it is. It all boils down to a choice. And you have to make the right choice that's best for you, even if it costs a little bit of money, right? Why not do what's going to benefit you long term as opposed to thinking about the short term? There's always a way. And that's why I like to tell my clients, there's always a way to get the desired result. Always. It's never a one and done. It's never a situation where if it's not today, it's never. We can always make something happen. But you got to have the right strategy for it. You got to have the right strategy for it. So I dropped the link in the chat. Everyone, as you book, just drop done. That way we know that you're going to be onboarded and coming in as a client and you're ready for the consultation. Now, let me introduce you to Rudy. Rudy was another investor that I worked with. He invests into restaurants. He has invested into a cleaning company. He also invests into real estate. I work with a lot of real estate investors, right? Recently, he wanted to invest into trucking. Same thing. He's using his own money, but he got tired of using his own cash and his own revenue to continue to invest in all these different businesses. So, hold on. Someone's knocking at the door. Let's see here. Oh. She might be asleep. So what happens is that, hold on, actually. Hey, why is somebody? Sorry about that. Somebody ordered Instacart and didn't tell me, so I had to go get the door. So, anyway, life happens in real time, people. This is not recorded. This is live. So, this is Rudy. So what we did was we put together a funding strategy for him so that he could take advantage of leveraging other people's credit so that he can continue to invest into his next endeavor, which was trucking. So right now we got him the funding, right? He needed about $60,000. He's looking for a truck right now at the absolute best price. And he feels carefree because he already has the funding. Now he's in a position of leverage. He's in a position of power where he can go out and he can just shop around for the best price. He has negotiating room now. He's not in a place of stress. He's not in a place of, for lack of a better term, static, where everything is scrambled up in his brain and he can't focus and he's feeling discombobulated because he's trying to figure out how can he hurry up and get this money together so he could buy a truck. He has the money now, so he can confidently just search for a vehicle. What truck is going to best suit his needs? What truck is going to give him the most profit based on the buying price? So again, in our breakthrough funding acceleration session, we are actually going to go through all of these different things. And as a matter of fact, let me show you guys a little bit more about what this entails. Right. So when you visit the site, this is everything that you're going to get. Okay. In this hour-long personalized consultation for you and your business, you're going to get, first, you're going to get a 3 ebook bundle that covers every aspect of your funding journey. If you need some help with your personal credit, not a problem. You're going to get the DIY Credit Mastery ebook, where it's actually going to show you industry secrets. I have a 5-year background in credit repair. These are the exact strategies that I have used over the course of the year or course of the years to improve people's credit. I say 100 points within 120 days, right? The best thing about this is that you can do it at your own pace. This book is for you to have, to hold, to keep. Whatever you want to do with it, you can even use this to teach other people how to improve their credit. You don't have to use this just for yourself. This can be for you and the family. Next up is funding your future. Now, this particular ebook I'm super proud of because this breaks down over 50 different lenders, their products, and credit limits, who they pull from. We're talking about loans. We're talking about credit cards. With this book, you can put together your own funding sequence for all my DIY people who's like, I can do that myself. All I need is the information. Right here is the exact information you're going to need to put together a funding sequence. Now, for those of us who may not have perfect credit, but we have an LLC and that LLC is doing good business, I have the business credit blueprint. Did you know that you can build business credit even if you got bad credit? The answer is yes. You can absolutely build business credit even with bad personal credit. In the business credit ebook, you're actually going to learn exactly how to set up your LLC and how to set up your business credit so that you can reach a paydex score of 100 all the way up to the point of being able to purchase automobiles without using your personal credit. And yes, you can absolutely buy a car in your business name with no impact to your credit score. Great thing about that, that auto loan will not show up on your personal credit, meaning it's not going to affect your DTI. You're going to get all 3 of these ebooks, plus the hour-long Zoom consultation that is specific to you and your business. The next thing you're going to get is actually have a 2-hour version of this call where I go into even more depth about structuring your business, more business funding masterclass. You're going to get that 2-hour recording. That right there is probably $100 easily. Last is you're actually going to get a 0 interest lender list. Now, this is a list of over 15 banks that offer 0 interest financing. Not only do they offer zero interest financing, I'm going to give you, I'm going to give you the bank. I'm going to tell you what credit bureau they pull from. I'm going to tell you how long the zero interest financing is for. And I'm going to tell you the exact product that you need to apply for so that you can take advantage of the zero interest. Remember earlier I said people are applying for the wrong thing at the wrong time that they don't qualify for? I'm giving you everything you need for all my DIY people who feel like they can do it all themselves. This is everything you're going to need. You have zero interest. Okay. You have zero interest financing. You have a 2-hour class where we go through this information again. You can take notes, you can pause it, you can rewind it. You have the written material that shows you how to build out your personal credit, how to build out your business credit separate from your personal credit, and then a funding your future book that shows you how you can use both of them to go get access to capital. On top of that, you get all of that, plus you're going to get an hour-long one-on-one Zoom strategy session where even if you just have some questions and you need clarity, maybe you already built out a funding sequence. Maybe you already built out a funding sequence, right? Maybe you already built out a funding sequence and you're like, oh, I just need to clarify. I need a little bit more understanding of some of these banks and what they want to see, right? Maybe you got denied and you're trying to figure out where you went wrong and it's not clear when you read the letter. And you need somebody to tell you exactly what to do to turn that denial into an approval. Maybe you're brand new to all of it and you're like, damn, this is a lot. I'm not even really sure where to start. I just know I got an idea. I know I got an idea. I know I got a business, but I need someone else who can really just take an hour to sit down and go through every little step with me so that I can feel confident in my next step. Along with all this information, I will even give you and tell you what bank to go to for your first $10,000 in funding. That's on top of the zero interest lender list. That's on top of the business credit blueprint. That's on top of the funding your future ebook, which also gives you lenders. But the difference that I'm going to tell you what lender you should go to for your exact situation, right? So we already know the ebook bundle. I give that about $197. It should really be more than that, but $197 is good, right? The 2-hour business funding masterclass and my zero interest funding sequence. Now, I'm going to say this by itself is $1,000 because I'm giving you banks that give you zero interest. Chase Bank, for example, Chase Bank can give you up to $100,000 at zero interest. That's one bank that can give you that. How valuable is that to know what bank can give you up to $100,000 at zero interest, who they pull from, and which product offers that level of financing? How powerful would that be for you? Now, I want to ask if we have any questions about anything that we covered tonight. Any questions? Karen, do you have any questions? Anybody else have any questions? I know we covered a lot. Hopefully it wasn't information overload. No questions? All right. So what I'm going to do, I'm going to drop the link in the chat one more time so that those who are interested can take full advantage of this. You're going to get a 2-hour session with me. You're going to get a ebook bundle. Okay. These are books that you can keep. It's not one of those things where after the call, they're going to be deleted or taken away. No. Once you have them, they're yours. The zero interest lender list is yours. The 2-hour recording is yours to keep. So you'll have everything that you need to put together and fund yourself. I'm here to make sure you have the right strategy to execute on it. Because right now, what's missing is that people are missing that one-to-one interaction. A lot of us are in different mentorships. A lot of us are in these mentorships, and they're great. They're giving out information that you can take advantage of. But the information isn't specific, is not for you. It's not for you and your business. It's not for you and your dream. It's, hey, this bank offers this business line of credit. This is what you got to do to get it. Go get it. But you don't know if it's really for you or not. You're still kind of like, it might be for me. It might not. I don't know. Or you're one of my gun hole type of people. You went out and you went for it. You're like, man, I'm going to go ahead, go for the joint. And maybe you got it. Right? Maybe you got it. Congratulations. Or maybe you didn't get it. Or you got it and you didn't get the maximum amount. You heard that you can get $50,000 from a particular credit union. But then when you applied, you only got $20,000 because you didn't know that the specs and the criteria for that particular credit union had changed. You weren't aware of that, right? So you're expecting 50, but you end up getting 20. So now you think there's something wrong. When in reality, the bank just changed. The banks are changing their lending criteria all the time. For instance, speaking of a credit union, PSECU, that was a very popular credit union at the height of the pandemic. They used to give out $50,000 between a credit card and a line of credit. Since then, and becoming so popular and being on the internet, they reduced that. Now it's only 30,000, right? These type of things you only know when you're staying consistently tapped in. And right now with the banks doing what's called a credit crunch, you have to be aware of what the banks are looking for, what the banks are doing. Because even when you have good credit, the banks still aren't giving out as much as they used to give. And there are certain things that you have to do to put yourself in position. There's certain ways that you need to apply to keep yourself in position. The banks right now are trying to compete with alternative lenders. They're trying to compete with the fintechs, right? They're trying to compete with CDFIs. They're trying to compete with merchant cash advances. They're trying to compete with payment processors that offer loans, because more and more people are looking for alternative ways of getting access to capital, because the credit crunch is preventing banks from lending as much as they used to. And businesses need access to capital. Okay. So I appreciate everybody for tapping in. Definitely listen, click the link. As always, like, share. My name is Jamal. I am your credit protector. I help small business owners get access to the capital that they need to grow and scale their business. Make sure you click the link, schedule that call, get your bonus materials and your bonus bundles, and I'll see you guys on the other side.